we go to the NASDAQ market site in New York, where Marisa Christian welcomes Dr. Robert Hartwig, economist and president of the Insurance Information Institute.
Yes, Brian, I'm here with Dr. Robert Hartwig from the Insurance Information Institute. Welcome, Dr. Hartwig.
Glad to be here.
I'd like to start by talking about the global economy. Now, there are continued concerns about economic conditions and sovereign debt among European nations. What does this mean for the insurance industry?
Well, there are significant implications for the global insurance business, and it is truly a global industry. We really have two major economies going here in the world right now, maybe even three. We've got the United States economy, which is recovering. We have the European economy, which is still suffering, and then the Asian economies, which are in fact decelerating, but still expanding. So to deal with the situation of Europe first, we do have an ongoing Greek debt problem, and that situation is not yet fully resolved, and there are potential other issues with countries like Spain and Italy and a few others. But the reality is that the Europeans have made significant progress here, despite all the pictures that you see about rioting Greeks on the streets of Athens. And ultimately, I think a solution will be arrived upon. It will be a costly solution, both in terms of the impacts for the people of Greece. A lot of the capacity for the U.S. insurance business actually, and reinsurance business, actually comes from Europe. That being said, when we look at the size of the Greek economy, when we look at the actual holdings that insurers and reinsurers have of Greek debt or of, say, German banks or French banks that might be exposed to the Greek debt, it is completely manageable, and I would not expect that this exposure would in any way affect the capacity or the pricing of insurance available on a global scale.
The U.S. appears to be cautiously optimistic about its own recovery. What key indicators do you look at, and how do they impact insurers?
Obviously, we like to focus on the employment numbers, which have been positive recently, with 257,000 private sector jobs created in January. We're looking for more strong growth in the months ahead. When we see job growth, that means workers' compensation exposure grows, for instance, along with payroll exposure. So that's great news for commercial insurers. But what we also see is when people are being hired, that means factories are running longer. It means means businesses of most sorts are in fact hiring people. So when we look at the energy sector, healthcare sector, even manufacturing today, transportation, whether it's trucks, marine, or rail, these are all expanding. They're hiring people, but not only that, they're creating insurable exposures. In other words, there are simply more things that need to be insured, both for the property exposure and the liability exposures, and then, of course, the hiring, again, the workers' compensation exposures.
How has the budget stalemate in Congress affected both the U.S. economy and the insurance industry as a whole?
Well, Congress has worked very, very hard recently to try to destroy the American economy, quite frankly. But despite that, American consumers and the business community have been able to shrug that off, and consumer sentiment has risen. We're seeing some expansion of business lending activity. Businesses are expanding, manufacturers are expanding. And so what we're seeing here is, despite the sideshow in Washington, and I think that's what many people have come to view that as, is really political theater, that it's time to get down to some real business and kind of, unfortunately, have to ignore what's going on in Washington. You have to pay attention to it, but the reality of it is there's a lot of political posturing out there, and rather than focus on this debt debacle, it looks like Congress now is settling more quickly on whether to extend such things as the tax cuts, whether or not to basically raise the debt ceiling. Nobody wants this kind of political fight in 2012 during an election year.
We're in the reporting period for company financials. How do the current economic conditions affect the results specifically in the insurance sector?
Well, we're seeing insurers being affected two ways as they report their fourth quarter and, in fact, 2011 final results. The first would be growth. As the economy expands a little bit, insurers are going to be able to participate in it. An expanding economy floats all ships, including that of the insurance industry. So more things to insure, that is nothing but great news. But on the flip side, we are seeing the Federal Reserve keep interest rates low and promises to keep them low for the next several years. That is hurting insurers in terms of their ability to generate investment income, and ultimately that loss of investment income has to be replaced. There's no way you can still pay for the same level of catastrophes if you're seeing your investment income fall because of low interest rates, and ultimately that has to be priced through in the cost of insurance.
Now, this might be a tough question, but what is your outlook for the year for the insurance industry?
Right. I'm looking for growth somewhere north of 4% for the property casualty insurance industry this year. I think that's going to top expectations, actually. And I think that, however, there are several lines of insurance that still are problematic. Workers' compensation, the results are still deteriorating, even as it expands, as payrolls expand along with hiring. We'll have some marginal deterioration in some of the casualty lines. Some of the major lines like commercial auto remain relatively stable. So I think we're going to see, hopefully, a reduction in catastrophe losses in 2012, though we really can't tell what Mother Nature's going to do at this point. But I think we'll see a better year than in 2011, but with some underlying deterioration, but also insurers making some progress at getting some additional rate onto the top line that eventually will work its way down to the bottom line.
Thank you, Dr. Hartwig. Always informative.
Thank you.